Hi everyone and welcome to Learn Accountancy. In the lecture 4 we will be learning about corporate governance and social responsibility. So, why is corporate governance an important topic? As you might know, there are scandals in the history which leads to the importance of a corporate governance. We will be looking at the highlight of these scandals now, and you may stop the video to see and read these scandals in detail. But we will just have an overview of these scandals now on the screen. So, the waste management scandal in 1998, the company was based on Houston, and what happened was reported fake earnings. And if you see, the main players who were involved in the scandal were CEOs and chairmen. So, the point of explaining this is that usually, whenever the corporate scandals happen, there is an involvement of a top management. You can see in another important scandal in the history, Enron, and here also shareholders lost 74 billion, and the main players can be seen with CEOs. Another scandal, WorldCom scandal. The company was based in telecommunications and inflated assets by more than 11 billion. The main player involved is again CEO. Tyco, a company based in New Jersey, and main players involved again CEO and CFO. Health South scandal, again what happened, inflated money illegally, and then the main person involved is CEO. So what is the point of looking at all these scandals is that basically there are CEOs, there are top managements, top dogs who are involved in such scandals. That is why the corporate governance was formed over the number of years, which actually provided the guideline as how to operate the company. So, corporate governance is a system by which organizations are directed and controlled by senior officers. Issues generally arise from separation between ownership and control, which is also known as agency problem. So, because of the agency problem, the problem arises because the owners are different than the person who control it, because owners they invest and directors they have an expertise to run the company, and they work in their own best interest rather than working in the best interest of the shareholders. That actually leads to an agency problem and so frauds and scandals in the past. So, what does C corporate governance mean to some of the top UK business heads? It means that operating at the highest standard, it is about leadership, it is about doing the right thing, and you can't see it, but it's integral to instill trust in your employees and customers. Now you can see development of a UK codified system. It was developed over the long period of years, starting from 1992, the first report about Cadbury Committee, and then finally it was refined, and in the best that we have now is the UK Corporate Governance Code 2016. Alright, what is the board? The board is the combination of people who work for the company. They are also known as board of directors. Okay, so board of directors are a combination of executive directors who work on day-to-day activities. Chief executive is the head of executive directors. Chairman is the head of non-executive directors, and non-executive directors are basically people who are employed on a part-time basis for a scrutinizing role. Audit committee's work is to review the financial statement, and remuneration committee's objective is to design the remuneration of the people on the board. So the role of the board, what is their main objective, is that they are the stewards of the asset on the behalf of the owners. They make decisions such as mergers, acquisitions, investment, capital projects, and borrowings. The board and corporate governance, basically you can see that directors should have a relevant expertise for the role. First of all, should receive appropriate information. The performance of the board should be assessed annually as to see whether or not they are working. The role of a chairman and CEO should be separated, should be split. Both of these person cannot be the same person, because that gives a lot of power to a same person, and that leads to a domination on the board. There is nobody to criticize. So this may lead to fraud and scandals because there is nobody to criticize it. Okay, let's understand what does non-executive directors do on the board. First of all, they are hired on a part-time basis. They don't have any management responsibilities, more of they have a scrutinizing role. They basically bring their experience to the board so that the risks can be avoided. They are definitely independent, that means objective, straightforward, and honest, and they are basically appointed for a limited time. That means their job is to scrutinize the things. What does the remuneration and audit committee does? Basically, non-executive directors can have a significant role to play. So as a member of a remuneration and audit committees, they offer a support for a risk management and a senior appointments. So the UK Corporate Governance Code can be summarized as the combination of main principles like leadership, effectiveness, accountability, remuneration, and relationship with shareholders. That brings us to our next topic, corporate social responsibility. CSR, or corporate social responsibility, is the idea that the organization have an obligation to consider the interest of our customers, employees, shareholders, communities, and ecological consideration in all the aspects of their operation. This means that the company owners or the organization should not be only focused on shareholders but overall stakeholders, and widen and see the interest of the entire environment, even about outside their organization as well as the inside organization stakeholders as well. So why CSR? First of all, it's basically growing expectations from the business, consumer awareness. There are several legislation which require the organization to have a CSR, and then because of globalization, there are best practices that are being adopted at the global level. So advantages of having a CSR is that you can enter a new market, launch new products and services, better management and conservation of a strategic asset, and internal and external relationship, freedom of operation, reduced government, and then NGO intervention in organization. But it can also lead to some problem that management may not be able to focus on the key activities, may look like cosmetic without a genuine social benefit, and may make organization more vulnerable. A restriction to the free trade also may be the case. So what are the four components of CSR that it focuses on? Usually the CSR focuses on the economic, legal, ethical, and discretionary area of the business. General value statement can be considered as organization should have developed a general value statement which reflects their stance. This may form part of a more comprehensive mission statement. So let's have a look at some of the general mission statement. For example, the Coca-Cola company focuses on environmental focus. The another example is shared by the Home Depot, focused on customer. Johnson & Johnson company, employees focused. And Bristol Myers Squibb focusing on a social focus. So all of these companies that I have shared with you can see that how they are focusing in their mission statements about the people who they care about. So at the end, there is a triple bottom line, which is a very good framework to expand the traditional reporting framework. So, and this can be considered in 3 P's, for example, people, planet, and profit. An organization tends to start focusing on, a triple bottom line reporting, which means that there should be a report on a social, environmental, and financial aspects of the business. Thank you all for joining. This is the end of session 4.